You know that music? We're talking money. Yeah, I see you shake into it. All right, despite the rise of interest rates and the fight against inflation, fewer Americans are actually filing for unemployment. Take a look at these numbers. The Labor Department says 217,000 people filed for claims the week ending October 29th. As you see, it's significant because it is 1,000 fewer than the previous week. And this comes as the Federal Reserve bumped up the benchmark interest rate 6 times this year alone. If you were with us yesterday, you watched live as they did it again. Economists had predicted yesterday's hike of 0.75 of a percentage point. That would be the last of the big hikes, but the strong labor market could really impact that decision. Joining us now is the Economic Research Director from Indeed's Hiring Lab, Nick Bunker. Hey there, Nick. In normal times, getting an unemployment report where we see fewer people on unemployment is a cause for celebration, right? But we're not in normal times. So help explain to people who are watching what does that mean in terms of interest rate hikes, what the Fed is looking for, and the overall state of the economy when we see these increasingly low unemployment numbers?
Well, yeah, as you said, we are not in normal times. Inflation is extremely elevated right now. And part of the Federal Reserve's job is to make sure that inflation comes down. And given the low levels of unemployment, the low number of people actually losing a job right now, the Federal Reserve views that they need to weaken this labor market. So if we continue to see really strong labor market numbers like we saw earlier this week and in the data that came out this morning, that means the Federal Reserve might need to hike interest rates higher than previously thought.
You know, we were expecting the final jobs report before the election to be released tomorrow. What are economists and experts like you looking for in this report, and what will it tell us about the Fed's decisions later on this year?
I think one really important number is maybe the number you hear the most often, which is the number of new jobs that are added to the labor market. That number has been very high over the past 18 months or so, as the labor market has rebounded very quickly from the initial shock of the pandemic. But it has started to come down as the labor market has slowed in recent months. Now, it's slower than where it was back in 2021, but that's like saying a car that is now moving 80 miles an hour after going 120 miles an hour is slow. The labor market's still growing very quickly. So what I and I think other economists will be on the lookout for tomorrow morning is any signs the labor market continues to slow down and moderates, because that's going to be a good indicator of whether the Federal Reserve starts to maybe rethink these really fast increases in the interest rate and the high levels, or if there's continued strength, they might need to hike interest rates even further.
We shall see. Nick Bunker, thank you very much.
My pleasure.